everybody. Welcome to the Trading Market Technicals morning call video for Thursday, July 26th. And today's going to be a pretty decent day, I would imagine. We have initial jobless claims coming out. Closely watch. As we can see, we're losing jobs here the last several weeks. So I think that's going to be a market mover and something really to watch closely at 8:30 this morning. Earnings continue to be mixed. Apple came out yesterday night and actually got crushed yesterday as well. Yesterday morning, down about $34. Put really a lot of pressure in the tech sector. And besides that, believe it or not, there was a whole lot of nothing going on. As you can see here on the 10-minute chart, we just traded sideways. We gapped up a little bit, sold back down, and then grinded higher into the close. Very similar to a lot of these reactions that we've been getting here the last couple of days. But now we're in this range again. So we're going to need a catalyst, whether it be good or bad, to get out of this area. One thing to note is if you look at the S&P chart, which I'm going to get into, we're clinging onto the 50-day moving average, which is acting as support. And we're in this range, sort of this double bottom type area. So I do think that a loss of that will drive this market down to the 200-day moving average. I clearly see a target of 1,300 and then 1,260 in the S&P cash. I do see that, and I think it's only a matter of time before it does get up there. The markets are lots of cracks we've been mentioning. So I just want to make that apparent to the longer-term investor that's following me, as well as the swing trader. Day traders really don't have to look at that. I just want to see where the trend's going to be for the day and then kind of react appropriately. All right, let's get into the charts because there's really not much to tell you about any recap. We had really just a slow grind, slow trading session, summer trading session. So really not much to say, but I do want to get into the charts, and I continue to see deterioration in a lot of the indicators. I don't see this as a healthy market. I think that the next move up will be sold into, and I think that's going to be an actual a very good move to do. Again, if you're a trader or if you're positioning yourself for a hedge. If you couldn't hedge yourself back up in here when I said last Thursday, watch out, market looks like time to roll over. And if you did miss that, I think the next bounce either lighten up your positions or put your hedge on if you really want to leave it. I also do want to mention that we are coming into seasonality time of the year now till about September. We do get a little bit of a mixed bag to a slightly negative bias in the markets. So, obviously anything could change. The Fed steps in. We talked about that Wall Street Journal report that the Fed will act on any stimulus by the end of August, September. Obviously, that could change everything. So we need to keep that in mind, keep that in the back of our heads when we're trading, okay? All right, let's get into the charts. I want to show you this. This is what I put together. I showed this to you yesterday, but I wanted to show you the deterioration in all of these indicators that we have here. Now, the New York Stock Exchange Summation Index went on a sell signal. Sell signal here in the markets. We rolled over, and of course, obviously, we rallied, but we rolled over. Market started rolling over. Sell signal again in the markets. We sold off. Back up in here, we had a buy signal. You can see with my point. I put all these arrows in here to show you. Roll over in stochastics. RSI now well overbought and rolling over. Okay, we didn't break the 70. That's going to be a key indicator. That's going to be a sell signal. MACD has now rolled over and officially has crossed over the signal line. So this to me is very concerning, and I could bring up a ton of indicators here. We could talk all day about it, but this is following price. We are having price action rolling over as well. And here's our S&P chart, our S&P cash starting to roll over. Now, I do think that we've been down for a few days. I also think we did put in a little bit of a doji candle yesterday, which I will show you. So anything could really happen here, and I do think that we will be probably moving back up, probably a dead cat bounce, and then, like I said, we get sold into, and then we have a little bit of a sell-off. The S&P 200-day. Now, I brought this in a little perspective here with a 50-day moving average. Can't break above it. As you can see, we tried, we did, we rolled back in, we tried, we rolled back down again, and now we're in this range here. Okay, not good. This is actually very bearish, and this is something that I want you guys to keep in mind, especially if you're looking for shorts. And any rally, anything that's weak that hasn't rallied would be a great indicator to get short. Crossovers of 50-day moving average in the S&P 200. Now, this is relation to the S&P 500 here. As you can see here, we just crossed over, and now we're starting to roll over. We crossed over here, we sold off. And again, you can see my point. So not really too good here. This is really something that's concerning to me. I personally will not be taking any long positions overnight unless it's something that's really rallied into the close hard, which I think we get a little follow through. But I wouldn't. I would not. It's just not the amount of risk reward really isn't there at this time with this market. There's still a lot of uncertainty hanging on the markets, and especially, of course, what's going on in Europe. VIX, take a look at VIX. Now, VIX, we broke out his bullish falling wedge. We're above that 20-day moving average, all right, in the Bollinger Band here. Now, what's happening is that we broke out and we put in a black candle. We immediately followed by a nice big engulfing candle to the upside, and now we're just stuck in the middle. So we have 3 inside days here, and this is going to be interesting to see where the VIX goes. Does it break out above? If it takes out this little consolidation, you're going to look to see the test at least at 24, and then 26, and then who knows where. But I would still not be surprised if we back test the upper trend line of this wedge and then break out higher. That's probably what it looks a little likely, that we break down a little bit here in the VIX, put a buy signal in equities, and then the equities rally, and then all of a sudden the equities gets to sell off, and then we could roll over again. Now that's going to happen because of the dollar, right? We talked about this already. This is a short-term view of the dollar, daily chart of the dollar. Now we've had a bull flag rally, and now we're just kind of back test. We had 3 good days up, and now we're right. This is healthy. This is actually still good. Still bullish in the dollar, which would be bearish for equities and commodities, okay? So let's keep this in mind and see where the dollar goes. Let's take a longer-term picture of the dollar. Here we go. This is what I had. Now, this is the weekly, right? So we're really going to see how it closes on Friday night. We'll look for Saturday morning. But we have a little doji candle up in here. Any push above next week is going to be really interesting, because if we take out this 84 high, then I think you're going to have a beeline right to the 88, 88.20 area, okay? This is going to be really interesting. So as you can see, when you have momentum in the dollar, look what's happening to the S&P on a weekly chart. So this is something that's really important that we want to keep an eye on, okay? Now, let's get to the charts where I wanted to show you on the S&P 500. As you know, I have this Bollinger Bands here. I also have put a Fibonacci retracement up in here on these 2 trend lines. We did have our double top here. And look at this, we have our little double bottom area, and the 50-day moving average in red is right now clinging to support, as well as it did here. We had a little rally and our sell-off. So we're really in this range from 1334 to 1377, call it if you will. So we're still bouncing around in here. We really haven't gone anywhere, believe it or not, since July. So now this is going to be interesting to see. Now, with this bearish rising wedge into this area of resistance of 1377, we have a little confluence of resistance here at this long-term trend line, which is going to be big resistance here, right? We did break, and then we fell back in bottom, and then we also have this area up on top. So this is going to be an interesting to see if we do break the low. Again, if we take out 1331, look for the 13 to 200 day to 1315, 1316 area, and then ultimately to 1260. I will go 1260, 1266, and then obviously we would reevaluate and see where we go from there, depending on what type of a fall. If equity sell off, is it a hard fall? Is it on volume? Is it just a gradual decline and maybe an A, B, C type pattern? Then something that we would just say that would be corrective, and then we will look to buy that. As of right now, the McClellan oscillator, which I don't have at the moment, is getting oversold, but not quite there yet. So there is still a little bit more room before I would say if you want to start looking for long positions, I would wait. I would hold off a little bit. I would run the week out, see how the week closes, and then look for new setups coming into next week. All right, let's take a look at our SPY. This is the spiders. I like to look at this with volume. As you can see, dismal. We had really an inside day and nothing going on yesterday. And again, when nothing's going on, I'm not looking to do any trading. I'm looking to set up my day for the next day, and that's what a lot of guys should be doing here. Again, if when in doubt, cash is a position. I firmly believe that to trading success. Okay, take a look at our IWMs. Russell, again, guys, one of the leaders. Really, really bad here. We have our downtrend line. We're down below the 200-day, and look at this. We're just widening. These MACDs are starting to really get going here. Low volume yesterday because we had an inside day, but still, nonetheless, not a pretty-looking chart. This is really concerning to me, as you know, the IYT. This is possibly, and I'm not a big follower of the Dow theory, but if this transports puts in a sell signal, I think you're going to have a little bit more pressure because there's a lot of people that follow the Dow theory which are transports. They look at the transports being a key indicator. So this a little bit more here, a little break below this 87. It is possible that you can get a sell signal, and then there's a lot of followers, so a lot of people would be starting to sell some stock here. Only there's no reason why not to be quite honest. We're way below the 200. Even if you back test it as 200, I think ultimately it will fail and break below these lows. Okay, big cap tech, despite a big heavily weighted Apple in the Qs, held in pretty nicely. So really not that bad. I'm actually surprised that the market didn't sell off as well as it should have, since Apple is a big follow. A lot of hedge funds are heavily invested in Apple. I'm surprised that Apple didn't really take the market down yesterday. So, and again, our earnings have been a big mixed bag. If anybody beats, if a lot of these companies beat, they actually were well rewarded. And if they don't, they would be getting crushed. Classic example was Apple. Again, another stock that's really not even in that category would be Zynga, ZNGA. Real crappy stock. Really nothing really to a point where any sort of value. That stock got a 30% haircut yesterday from like $5 down to $3. Actually even below $5. So something to take a look at. Just want to keep you guys on your toes, and also make sure whatever you're trading or holding, you look at the earnings calendar. Okay, here we go. Here on the 200-day on the diamonds, clinging to the 50-day moving average, but again holding up. Also, the industrials seasonal tendencies are negative between now and around October. So again, guys, something to keep an eye on. Really not much else to talk about, but let's be on our toes today. Let's see what the initial jobless claims come out, because I think that'll set the tone for the day. Have a great day, and we will see you tomorrow. Oh, I do apologize for the video yesterday. We had some technical difficulties uploading on YouTube. It uploaded the video properly, but it just I had a bunch of emails stating they couldn't open it. So let's see if this works today. I do apologize for the inconvenience. We'll talk to you tomorrow. Take care.